Ray Dalio sounded the alarm bell after inflation in the U.S. surged to the highest level since 1990 and warned his followers that rising portfolio values don't actually signify increasing wealth. We will be talking about what he said and the significance of the market in the future. Stay with me to the end of the video to learn everything. Now, let's get right into it. For starters, Ray Dalio predicted the 2008 financial disaster. Then he anticipated that the COVID epidemic will cause years of a long-term financial burden on the U.S. economy. Now, the 72-year-old billionaire investor who turned Bridgewater Associates into the world's largest hedge fund is predicting a new economic disaster, and he wants you to be ready. "I think we're at risk of a war with China," Dalio told CNBC Make It during a live-streamed Q&A on Friday, largely due to misunderstandings. Dalio pointed out that his forecasts are not facts. He's made mistakes in the past. However, based on historical trends over the previous 500 years, he believes that future disasters are unavoidable. In other words, if the looming war between the United States and China does not devastate the economy, something else will. Here's why he believes calamity is on the horizon, as well as his top 2 financial preparation tips. Why Dalio believes the U.S.-China trade conflict will worsen. Dalio stated in his most recent look, Principles for Dealing with the Changing World Order, that American efforts to make China its culture more American might eventually backfire, sparking a war. This might exacerbate the two countries' trade war, which was launched by Trump administration in 2018 and has resulted in pay cuts, weaker corporate margins, and higher consumer prices in the United States. According to a Moody Analytics estimate, the trade war lost Americans at least 300,000 jobs in its first year. According to a report published last year by the Federal Reserve Bank of New York, the trade war has cost American corporations $1.7 trillion in market value. Dalio's remarks against China have recently sparked controversy. He corrected his statement in a LinkedIn post after telling CNBC last week that China's human rights regulations were equivalent to those of a strict father. "I was attempting to explain what a Chinese leader told me about how they think about governing," Dalio wrote. "I was not expressing my own opinion or endorsing that approach." In that post, he also expressed hope that the United States and China might back down from the brink of war. "What I think and what Bridgewater does are of minuscule importance relative to the rapidly growing risk of U.S. war with China," he wrote. "I hope that thoughtful attention will be paid to that issue and that mutual understandings will increase and inclinations to fight will diminish." His first piece of advice is to assess your financial risks. Whatever happens, Dalio said on Friday, he has a simple rule for dealing with future events. If you worry, you don't have to worry. And if you don't worry, you'll have to. Worrying, he says, causes you to examine your own particular dangers and encourages you to act on them. One danger might be location, which refers to the physical location where you live and work. Dalio's book includes a health index that ranks a dozen countries based on 18 characteristics such as financial loads, military strength, and economic production. It is meant to be a resource for readers to analyze risks and develop strategies for where to live and invest. And he hopes to establish a website with real-time copies of the data, according to Forbes. Moving is, of course, inconvenient, but Dalio believes is worth considering in financially precarious situations. Flexibility is essential, he stressed. Similarly, he suggested that you calculate your financial risks in inflation-adjusted terms rather than in today's dollars. If you have cash in a savings account, for example, it is likely to grow at a different pace than your other assets since it is taxed by inflation. His second tip, save and diversify your portfolio. The first stage in building a robust portfolio, according to Dalio, is to evaluate your existing investment plan, if you have one, to determine how many weeks you might financially live if you lost your job. It always pays to figure out what the worst-case scenario is and prepare for it, Dalio added. Then be certain that your money is not concentrated in a single location. Cash is not a secure investment, Dalio told CNBC last week, as inflation in the United States reached a 31-year high. Instead, he advised on Friday to develop a portfolio as broad as possible with assets ranging from inflation index bonds, which Dalio advocated above normal bonds, to physical assets such as gold. Thank you for staying with me till the end of the video. I hope you enjoyed it. If you did, like and share the video. You can leave your questions and thoughts in the comment section below. Don't forget to subscribe and hit the bell icon to get notified when we add new videos in the future. Thank you for watching, and we'll see you in the next video.